Let's have a look at what you're making of this tussle between what the bond market is saying to the RBI and what the RBI's remit is fundamentally, and the stresses and strains there.
Thank you. First of all, I see it as a standard tension between market participants and the monetary policy authority, especially when the views differ from both sides. This is nothing to be surprised about or to be overly concerned about. Market is thinking that excess supply of GSEC in the current fiscal year due to large market borrowing program by the government and the large fiscal deficit. Along with that, the recent inflation footprints, the higher level of inflation crossing the upper boundary of the corridor. Based on this, market is expecting that monetary policy should be tightened. Whereas Reserve Bank and the monetary policy authorities, monetary policy committee, they see it from their perspective in the sense that, first of all, the accommodative stance on liquidity, and that is committed for the entire fiscal year. With that, they expect that market borrowing programs should go through smoothly without disturbing the yield curve. And the recent elevated inflation is also in their analysis. It is due to temporary supply side shocks, more specifically because of the second wave in of the COVID lockdown. So that is why Reserve Bank is not very much concerned about the immediate increase in the inflation rates. But not only that, Reserve Bank is also following up its belief with words and action. Governor has explicitly spoken about it, and also through auction developments, Reserve Bank is sending a strong
Gandhi?
message. Yes, please.
I would just keep it a bit briefer if we can. Just looking at, you're saying the RBI shouldn't be looking at inflation, short-term inflation at least at the moment. That's basically what people are suggesting right now. They need to be concentrating on the economy and economic growth. Are they doing the right thing?
Yes, inflation, the current assessment is that it is because of the temporary factors, which I did mention. Now that the economy has been reopened again, the supply side constraints should be removed. So that way, inflation will be back into the normal trajectory as per the projection by the Reserve Bank of India. And as regards to growth, yes, is it likely to be overheating the economy because of the robust growth prospects that everybody is expecting? I believe that it is unlikely because unutilized capacity is still large in the economy. Low credit growth is there, and the consumption and demands are still under subdued level. That's why inflationary trajectory is likely to be downward sloping because of the growth, expected growth.
So given that consumption remains sluggish, what do you think can be done by the government, by perhaps even the RBI, to revive demand?
Yes, consumption is basically a function of income and certainties. So policy certainties will always be conducive for discretionary spending to be in place. And the fiscal policy should be targeting more towards leaving more money in the hands of those who will consume. That is bottom of the pyramid type. And that's what the current government is targeting with the targeted subsidies, Manrega allocation, and the like are the right choices which the government has chosen. And for discretionary spending, yes, obviously, currently, because of the last year COVID situation, a lot of uncertainties were there. The safety first attitude was in the hands of the people who have money. But to encourage them to spend more, policy should aim to bring in that certainty on income generation growth. So to that extent, whereby the current policy environment is moving towards that. Right. So I would believe that consumption should perk up in the days to come.
Oil front and center easing today, but remains elevated. Will that hurt India's recovery story?
Sorry, I didn't get the question.
Elevated oil prices, are you concerned about it? Will it impact India's growth?
Oh, elevated oil prices or inflation?
Yes, oil.
Oil. Yes, oil prices have always been a worry with respect to Indian economy. So the recent prices is certainly as a matter of concern. Even the Reserve Bank's monetary policy report, which assumed the oil prices to be around $65, today it is 70 plus. So to that extent, by the fuel price increase is a concern. But is it going to be affecting the inflation too much? The assessment says that about 10% increase will be on the inflation. Its impact will be something like 30 basis point. So I think that it will be a manageable proposition. It is not going to be disturbing the apple cart too much.